Hey everyone, welcome back to another episode of Deep Dive Podcast. I'm your host, Rachel Wolfson. Today I've got a great interview lined up for you. I am speaking with Alex Davis. He is the CEO and founder of Mavryk Network. In this interview, we talk all about tokenizing real-world assets. So for those of you that don't know, Mavryk is a layer 1 blockchain. On top of that blockchain is a tokenization platform that tokenizes RWAs. So Alex goes into some use cases there. He talks about why tokenized RWAs are really taking off in 2026 and what elements are there to ensure that RWAs are actually ready to be deployed. So this is a great interview, especially if you are interested in tokenizing real-world assets. Before getting started with today's episode, I also want to take the time to thank the house for letting me film today's episode at this beautiful podcasting space in San Francisco. If you're interested in learning more about the house or co-working here, you can check out the website that's linked in the show notes. I also want to remind you guys to like and subscribe, especially if you enjoy the content that you're seeing today. I've got plenty more of that coming your way, so be sure to stay in touch. And without further ado, let's get started with Alex's episode. Hey Alex, how's it going?
It's going great. How you doing, Rachel?
Doing well. It's good to have you on the podcast. I know that we have definitely met in person at probably multiple crypto events.
We have a few times, and I think for both of us, as we just said, maybe with better weather on both sides. So, on your side a little bit cold, on my side a little bit warm. I'm happy for at least the equilibrium. If we can find a city with that, then in person might be better.
Definitely. So Alex, before we get started with the tough questions, could you tell us a little bit about yourself, how you got involved in the crypto sector, and what you're doing at Mavryk?
Yeah. So, long story short, my name is Alex Davis, born and raised in Los Angeles, California. I got involved in the crypto sector by wanting to start an insurtech company back in the day, working my way up at an incubator, eventually becoming an advisor to the CEO. From there, I became the chief innovation officer at the Tezos MENA office. From there, I started the only VC-backed DeFi app on the chain, realized that we needed to branch into a chain that's a little bit friendlier towards DeFi and RWAs back then called STOs, security token offerings, and decided to expand and create Mavryk as quite frankly, a layer 1 blockchain specifically designed for tokenizing RWAs. We built a tech stack on top of Mavryk as well called Equiteez, which is the tokenization powerhouse that tokenizes everything on the Mavryk chain. So everything from pre-tokenization, DD, consulting, issuing the token, distribution as a primary offering, 3 kinds of secondary markets, as well as the lifecycle CRM management for that token. That's how we, kind of how I got here. And we've licensed that tech in a joint venture partnership with a company called Multibank that does about $35 billion a day in CFD trading volume. So all of Multibank's RWA technology is powered by Equiteez on Mavryk. And that's the last 8 years of my life in a nutshell.
Nice. Wonderful. So you have been in the crypto sector for quite a while, right?
Yeah. Yes, with a big sigh, I could say. It's not quite OG, but then when you see how many people come into the space, you start to, I'm like a level with the OGs, but not exactly, there.
I would say you're OG. I consider myself to be OG now as well, since I've been in it since 2017. So.
Oh yeah, same time. Like pre-run up in 17 is when I started getting into it. And, but there are those who are just that one notch higher. And I'm like, if I only would have paid attention and mined Bitcoin in 2011 when I wanted to and went to college instead. So
if we all could have, but that can be a conversation for another episode. Alex, so Mavryk is a tokenization platform, correct, for real-world assets?
Yeah. So Mavryk is the chain itself. It's the underlying settlement layer. It's the layer 1. On top of Mavryk, we built something called Equiteez. So the main company is called Mavryk Dynamics. Think of it as like a Mavryk Labs, so to say. And all of the assets tokenized by Equiteez and the partnerships with Equiteez are tokenized on the Mavryk chain.
Got it. So Mavryk is a layer one blockchain, and on top of that, you have the tokenization platform.
Correct.
Okay. So can you tell us a little bit about tokenization with real world assets? I mean, we've seen this for a few years now, and now it's 2026, and I think tokenized real world assets are making a comeback. So what are your thoughts on what we saw previously versus now and how that's impacting the platform?
Well, to build on what you said, I don't exactly think they're making a comeback. I think this is actually this is when they're becoming like the homecoming queen, so to say. Back in the day, they used to be STOs, security token offerings. And this was think of 2018 when we were just getting out of the ICO phase, getting into deploying actual products on top of chains. And there were a couple STOs, the security token offerings. And now STOs died out. The field was a little bit too immature at the time. The technology was not exactly there. And now we've come to a place where the technology, the business maturity, and the regulatory environment are all emerging together to meet at this focal point. And so, as we call them now, RWAs, real world assets, we're getting to the point where blockchain really can become the infrastructure layer for how all value gets transferred. And that doesn't matter whether that value is a tokenized piece of gold, a tokenized hotel, or a certificate of authenticity as an NFT. That is still a form of value. It's not, arbitrary artwork, but it's this method of transferring the provenance of ownership from A to B to C to D as it goes across transactions. So RWAs are, for me, the saving grace of blockchain technology. It is the future of digital finance. It is everything that is currently conducted on analog systems. And I would consider, for the most part, centralized digital finance as it comes, it's really becoming interoperable with blockchain. It is the way that we enforce real ownership of something in a digital form. Because if you just had a dollar bill and you digitize it, and let's say you deposit $100 into Chase, right? Chase has full control over those dollars that you put into the bank. You can't just transfer easily or at your own will money from Chase to point B, or a stock from Robinhood to Ally Bank. So blockchain gives the ability to actually have digital ownership in a world that is centrally controlled digital ownership. So I'd call everything from 2000 to 2020 almost Web 2.5. Blockchain gives us the ability to truly own anything.
Definitely. So can we talk a little bit about what assets are being tokenized on the platform? That's my first question.
Yeah, of course. Our debut asset is a joint venture with Multibank and Khabib. So Khabib is a 29-0 UFC champion. I struggle to say his last name because it's Dagestani religious, and so it's Nurmagomedov. I need to properly get that down. But Khabib is creating a series of gyms, UFC fighting gyms, not UFC officially, but MMA style fighting gyms, along with his own MMA league. And so we are tokenizing that as a joint venture between Multibank and Khabib. And in that joint venture, you get access to 30 of his global gyms and the MMA league. In addition to that, the CEO of MBIO and I were just in Ghana meeting the king of the Ashanti tribe, and they are the majority tribe in Ghana. I think we were only going to allude to this, but I guess 8 minutes into the conversation, it's coming out. Long story short, the Ashantis are the largest tribe in Ghana, and Ghana is Africa's largest gold producer. And so we are transferring Ghanaian gold, Ashanti gold, to vaults in the UAE and tokenizing the safekeeping receipts, the one-to-one backed of that gold here in Dubai. It's redeemable as well. In addition, we also have a $3 billion deal with MAG, which is a real estate developer. So long story short, that's our current publicized deal flow. There's more in the pipeline. But one of the more interesting things that I think is that aside from gold, yield-bearing assets are really the low-hanging fruit of tokenization. Gold tends to be an outlier as it's an actively traded product. So that is are even not public, I guess, at this point while we talk, deal flow.
I see. Okay, let's back up a little bit. What does the tokenization process look like? How does that even work? If I say I want to tokenize, this sum of gold, how would that actually work?
So the way that it works with tokenized gold is effectively the gold is refined partially on site and then further refined at the local refinery. Then the bars of gold are stored in a vault. Then that vault issues what's called an SKR, a safekeeping receipt, effectively almost like an LP token, an analog LP token in a way, of that gold. It's a redemption against vaulted gold. Those SKRs get put into a holding company, and then there's a trustee company that audits and verifies that the holding company holds those SKRs and they're not rehypothecated, lent against, sold, etc. So there's always this constant stream of checking that the holding company is owning all of the SKRs. At that point, we issue a token that's one-to-one backed according to the SKRs that's in the holding company, and those backed tokenized forms of gold are sold to the public.
I see. Okay. So basically, once something is tokenized, the public has access where they can actually take part in having that asset.
Correct. Yeah. It's institutional buy. And in terms of like some private equity deals and gold, there's a lot of like institutional buyers, but also the public will have access as well. I think it's one of the most important parts of tokenization is not just making private equity easier and cheaper for the ultra wealthy, but also offering global access to the investments as well.
Definitely, for sure. And then also I know that real estate, and as you mentioned previously, real estate is now being tokenized as well. So how would that process look like?
Real estate. Well, there are a couple ways to tokenize real estate. One of them is the Dubai Land Department, the DLD, has a program to tokenize the title deeds to the real estate. It's been a little slow on the upkeep, on the uptake on that side. The more popular form of doing so would be to put the real estate into a SPV as a management company and then tokenizing shares or some sort of fiscal contract with the SPV. So think of it more so as single asset REITs in a way. And so you're buying into this almost actively managed single property with real estate tokenization.
Okay, got it. So it's not like, okay, I'm going to tokenize my house and that's going to give someone access to it like an Airbnb, but it's more as if you can tokenize something and somebody could say that they own part of that, right?
Correct. I mean, you can tokenize like portfolio, even single Airbnbs, or, an Airbnb is an actively managed, yield-bearing product, if you think about that. Or I would say that a portfolio would be more attractive because, sometimes one city does better than another. So you diversify across multiple assets. But yeah, it effectively, I mean, long story short, the tokenization gives you access over, it's a record of ownership over an asset. Now, what that asset is really depends on what's being offered. But the tokenization of the RWA, that token itself, think of it as a digital certificate of ownership over some asset in the real world or some fiscal contract in the real world.
Got it. Okay, wonderful. So, Alex, you said something really interesting at the beginning of our conversation. You said that RWAs now, they are taking off, right? And because there are certain elements that are ensuring that regulatory and the space has matured. So can you kind of elaborate a little bit on why we're seeing tokenized RWAs finally having this spot in the, in the spotlight, right?
Yeah, I think a lot of it has to do with market maturity, which also highlights a large level of market immaturity over the last several years, right? Since DeFi summer, effectively, we've been seeing stupider and stupider cycles of, oh yay, we're gonna now we've got NFTs and we've got like pardon the French, we've got bullshit that we could invest into. And then we went to meme coins and we're like, we've got more bullshit that we can invest into, these get rich quick schemes. And it's never really worked like that in private equity or investing ever, right? There's never, forget blockchain, put that aside. The get rich schemes are usually snake oil. And so we've effectively created systems that in its immaturity allowed for snake oil to be sold easily. And so you've had this NFT run, then the meme coin run, now prediction market run. And for the most part, it's been garbage. And so RWAs are now the maturity phase of this technology and its deployment. So we're getting to the place where we're getting companies who understand the tech finally starting to understand and develop the mindset that we need to talk to the traditional finance world. We need to interoperate with them. The traditional finance world realizing the benefits of this technology, and now we're merging these together. And so with this, I'm really starting to think that it's just about market maturity. And even then, there's probably only about 5 companies who are really doing RWA technology well. The rest, I said this on stage at the Blocks conference here in Dubai yesterday, that most companies think they know about RWA technology, but they're doing either one facet or they've got it completely wrong. And so we're seeing this as a buzzword, but it's market maturity in a nutshell. I mean, think of it as a college guy finally getting into his 30s and saying, oh, well, you know what? Maybe I should stop messing around. And that's the way I kind of look at the maturity of the space.
Which companies are doing RWAs really well right now? Can you give examples?
Give examples of our best competition. Let's see.
Well, obviously Mavryk, right? And we talked about the use cases that you mentioned, but I'm just curious to know what other companies out there are doing it and what use cases they're showing.
So there are numerous companies that are out there. I mean, I really have to hand it to Realty for being almost a first mover in this space of tokenizing real estate, primarily in like the Detroit and single family housing, moving into Panama, et cetera. They have a long way to go with interoperability with DeFi and like traditional, financial services and customer experience. But I have to say, in terms of first mover, I got to tip my hat off to them. Lofty's done some stuff well, although I'd argue that the due diligence on that end is they effectively work as, how do I put this, fancy lending solutions. Goldfinch has done well with private credit. Securitize is interesting, although if you actually look at their IPO filings, most of the money they're making are effectively payments, incentivization payments. I'm not going to say the word that starts with a B, but blockchains paying Securitize in order to deploy the RWAs on their chain. Securitize is probably the most valuable tokenization company that's out there today. Then there's also Superstate, who's also in the kind of private credit treasury side. Plume's Nest has done a decent job on the private fund tokenization, although I'd argue that is it really tokenization if you're just using stable coins to deploy into managed funds? So I've actually had this conversation with somebody about there's using blockchain technology to implement payment rails, and then there's ownership. In my opinion, I think RWA tokenization is really the use of this technology to get rid of the gatekeeping of investments from the general public and affording it to more people in terms of true ownership. Not just, hey, give me your stable coins, we'll deploy it into a fund and give you a return. But hey, we will give you access to own this hotel in Iceland, this hotel in Miami, this hotel in Dubai. We will give you access to this ETF of hotels packaged together for Western European hotels, Eastern European hotels, not just a managed fund of give me your cash. If you just take stable coins instead of a fiat bank transfer, it's transitory, in my opinion. For me, it's really about full on-chain ownership and where you take it from there and creating bespoke ETFs, bespoke finance of packaging these RWAs together. That's real tokenization in my playbook.
Yeah, no, I think that's great. I think that's a great explanation, because you kind of just broke it down. Like when we think of stable coins, right, and making stable coin transactions, is that tokenization, right? Or is it about real world ownership, which like on-chain ownership, which is what you just basically said. So I think that's great. I think it's a great way to describe what the use case is for tokenized RWAs. It's on-chain ownership. My next question is, can everything be tokenized then? If we're talking about on-chain ownership, can we tokenize everything, or are there certain assets that are better to tokenize versus others?
Everything can be tokenized, yet there are assets that are more adept to tokenization than others. And for like a funny little kick, there was actually at some point when the NFT craze was going off, I should say, high school kids were tokenizing pictures of each other kids' moms and trading them during class. So that is something that I would say is, at least they're being innovative is probably the best way to put it. But when it comes down to the low-hanging fruit of tokenization, I would say that we're going to see that the low-hanging fruit is yield-bearing assets. And that's why you originally saw, when it comes down to it, fiat currency, right? If you take a look at Tether, if you take a look at Circle, they're tokenizing they're tokenizing from the user perspective dollars, right? Fiat currency. But in the back end, they're actually using those dollars that are backing the tokenized dollar, and they're putting it into treasuries so they can earn yield from a centralized company perspective. But they are tokenizing fiat currency. And then the company is earning the yield on that. Then you're getting into treasury tokenization. Think about Ondo and most of what BlackRock is doing. And so you are giving the ability, the easier ability to get into a yield-bearing asset, which is U.S. government debt. And until they default at some point, because 39 trillion is a really big number, they're going to continue paying yield on those treasury bonds, right? And then if you look at, real estate is another one. Real estate is hopefully, if you've invested correctly, a yield-bearing asset, right? You rent it out, it's a hotel, etc. So there's that. There's also insurance-linked securities, which I think is a wildly untapped market, both in the Web 2 space and in the Web 3 space. I think there's only one company who's getting into it in Web 3. And there was one company in Web 2 and they faked lines of credit. So they went bankrupt. But long story short, yield-bearing assets. Now, outside of yield-bearing assets, you have other things such as gold. Gold is a very highly liquid and desired and traded asset. And so gold tokenization is taking off with XAUT from Tether, in addition to the Ashanti gold and as we call it, King's gold, that we are tokenizing with Multibank and the Ashanti Kingdom. So that is something as well. I wouldn't say that commodities is a low-hanging fruit, particularly because commodities has a cost of carry. You need to pay to vault those commodities and secure them if they're being vaulted, for example, unless it's a mine or this or that. So that's another stage underneath there. There's private equity as well. I would say that startup equity shouldn't be traded. It might be controversial to say that in my space, but there is a beauty to startup equity not being actively traded and having runway to get your product to market. Typically if you invest as an angel into startup equity, you've got 5 to 7 years before an exit or a acquisition. If you are raising a Series B or a Series A and one of your investors got divorced and they needed to sell the equity that they invested in your startup at a lower valuation than what you're raising at, it'd be catastrophic. So I think that startup equity should probably be one of the last things that's tokenized, or at least actively traded. But there are realms it's a totem pole of the low-hanging fruit and then other elements that find benefit within tokenization. We'll eventually get there. Think of, I'm a big F1 fan, so think of let's say Max Verstappen and one of his his race suits or his helmets that he wore, or gloves that he wore during a race. If you have an artifact, or memorabilia, I should say, artifact makes it sound ancient, that Red Bull would like to auction off or sell, how do you know that it's real, right? I have a basketball that's signed by all the Lakers from the year 2001 or so. I don't have a certificate of authenticity that proves it's real. My family was involved with the team for a little bit, and then I ended up getting it as a gift. But if you have a race-worn jersey, how do you know that Red Bull's really sold this? How do you know that it's authentic? How do you know that Muhammad Ali actually signed these gloves or Max Verstappen wore this helmet? So you can use an NFT as a certificate of authenticity. I'm not talking about fractionalization or tokenizing a picture of the helmet. I'm talking about a certificate of authenticity that is issued from a Red Bull verified account that then says this article of memorabilia is officially from Red Bull, was sold to Rachel. Rachel held it for 2 years. Rachel sold it to Alex. Alex held it for 2 years. Alex sold it to one of his friends or gifted it to one of his friends, So you can trace ownership over a series of time with this NFT as a certificate of authenticity rather than artwork. And there's tremendous value in that. And if you in its provenance of authenticity and ownership. So just like Larry Fink, I think everything will be tokenized. The question is how, where, when, to what degree, to what value add. I think markets eventually over the long run will decide.
Definitely. Wow. Okay. So first of all, that was a lot to take in. Really good thoughts there. Let's talk a little bit about traditional finance and how tokenization is going to transform TradFi. First of all, when it comes to institutions and tokenization, what's the conversation like there? I mean, how has that been? I'm assuming you've had these conversations, right? Like there are obviously institutions that are skeptical, right? So how does that conversation look? Are we seeing more openness to this now, or are we seeing skepticism? Like, how is that looking?
Well, I mean, imagine try convincing a pension fund why tokenized assets are a good place to put their money, right? It's literally the boomers of the boomers. But institutions are definitely interested. I can say that from a lot of private conversations and what we're seeing in the space. There is a lot of TradFi, for example, in if you think about from a regular SME perspective, there's invoice factoring. So if you're manufacturing someone, you might give a company 30 days of terms to pay, but then the company actually needs to get that money before the 30 days. So they actually take a loan against that invoice and they pay a yield. Well, they pay a percentage so that the lender can earn capital. There are institutions that are looking at this as a means of streamlining liquidity flowing into TradFi products. And so there's like the SME route, and then there's the institutional route. Banks like Standard Chartered, JP Morgan, I guess they're Chase also. There are ways of, if you think about how many employees banks have, they have tens of thousands of employees whose jobs are to verify information, verify data, verify paperwork that can be automated. It's just automation software. At the end of the day, it's fancy automation software. And so once it gets verified, once you put verifiable information on chain and you can authenticate its data from day one, then you can ensure that it's not tampered with along the way. So institutions are interested in this from several perspectives. It depends. Are they looking to deploy capital, which they definitely are interested in terms of tokenization, because it reduces their overhead for example, a family office. It reduces the overhead of the amount of people that they need in order to manage an asset, or gives them access to, a family office that wants to deploy $10 million can't buy a $100 million hotel. They can buy a part of it if it might be syndicated. Real estate, or I should say investment fractionalization in the private equity field is called syndication. It's being fractionalized over a group of investors and individuals. Tokenization allows for that to occur in a more streamlined, efficient basis. So I think people are looking at this institutions are looking at this from a perspective of, this is just a better way to manage our assets. And I think at the end of the day, no one actually cares about blockchain, right? The tech stack doesn't matter. When you stream on Spotify, it doesn't matter. When you downloaded, when I was a kid, and I may or may not have used Napster, we downloaded MP3s and we were like, oh yeah, I'm going to get this new MP3 and it just came out, whatever. The MP3 was just a means to obtain a song, but at the end of the day, it was still a song, right? So RWA tokenization, tokens, blockchain, is just a means to the digital new technological way of streamlining your access to this thing. And whether that's a song or whether that's an asset, in 5-10 years time, we might not call them RWAs. It might just be an investment. The same way that we don't own an MP3. Well, that's ironic considering Napster, but we don't have this MP3 and it's just a song that's on your computer in your iTunes or Spotify.
Yes, definitely. Okay, Alex, so we've got an interesting question that I posted on my X account that I was interviewing you today. And I actually wanted to ask this question as well, but somebody responded, they want to know what the major implications are of Mavryk partnering with Fireblocks. So, and can you talk about that partnership as well?
Fireblocks is honestly the world's, the global leader in institutional custody. Now, when that comes, due to the MPC tech that they're using, like I said, blockchain tokenization is a means to an end, right? People want assets. The way that they The degens want to hold their own private keys, but institutions can mess up custodying private keys, or who do you give access to within the organization, or the rules to which who has access to, the tiered management rules within an organization. So the Fireblocks Mavryk partnership is something that gives effectively tokenization is a B2B2C industry. So it gives our end client user, now that client could be retail or institutional, it gives the client an easier, more manageable, seamless way to just simply hold the asset that they want to hold. Your average person doesn't want to deal with private keys. They want to make sure that their asset is secure and safe. And so Fireblocks provides that at the end of the day. And not only the Fireblocks integration, but Fireblocks also purchased a company called Dynamic, who we were interested in working with earlier. And Dynamic has created one of the most interesting embedded wallet solutions that also uses MPC technology to give users a wallet that they still don't have to deal with their private keys. So it gives you all the benefits and ease of use of having an account, the way that you would have an account at Ally or JP Morgan or Robinhood. And it gives you the ability to have the security of non-custodial assets, of bearer assets, as the TradeFi industry would say. But it gives you that security it gives you the ease of use of TradFi, right? But it gives you all of the security of bearer assets and DeFi in your own account. We're actually using both Fireblocks and Dynamic in the deployment for the multi-bank RWA platform.
Okay, wow, that's great. Yeah, good to know. Great. Well, Alex, I know we're running a bit low on time, so I also wanted to ask you, in terms of how do you think the RWA tokenization space is going to evolve moving forward, and what you hope to see there?
Oh, wow. So I think I'll start with what I see as the future of tokenization, because quite frankly, I hope and believe we get to a point where everything is tokenized, where the over-regulation and the gatekeeping of investment assets towards normal people is gotten rid of. If you look at the only things you can invest in if you're not an institution or an ultra high net worth individual, so 95% of the world, or even more, is the stock markets and real estate. Stock markets are highly overpriced and, I dare to say, manipulated. Real estate is highly overpriced as fiat currency has become losing its value at a tremendous pace. And so real estate is out of reach for most people. The stock market doesn't really get you any returns, or, it's highly volatile, it's manipulated, you don't know what to trust anymore. The private equity field, like only 2,000 companies are actually publicly traded in the United States. There are 6 million private companies, though, in the US. Car washes, senior care facilities, restaurants, everything, all these different assets that you can own in small business. And so these are being gatekept. All the regulations that meant to protect investors are now actually overburdening on them and have now kept them away from investments. And so the middle class, for a multitude of reasons, is being decimated. And RWA tokenization and the access to these investments is now reopening that ability to financial future security. So the way that I see this is that I really hope that the future of RWA tokenization re-empowers the middle class. I believe it will be led by institutions, but it will re-empower your everyday person to manage their financial security in the future. Everything will be tokenized. You'll have a wallet or an account where you can have a part of a hotel in France, a part of a hotel in Germany, an ETF of Western European hotels, an ETF of Eastern European hotels, insurance-linked securities for car insurance out of Dubai, insurance-linked securities for car insurance out of the West Coast, all these different sorts of things. And so I see a future that is, even going farther than that, Elon Musk talks about the necessity for universal basic income. I think it's a necessary evil. As AI takes over jobs, we're not sure what we're going to do. I think that the future will really be managing assets that you hold in your portfolio on an account. You might have some form of UBI that pays you to make sure that you've got food on the table and a house over your head. But as AI and automation, robotics takes over, you will have the way to level up your life will be to trade upwards and to manage assets going upwards. That's where I see the future of ownership of everything being digital. When it comes to the industry and how we will, I guess, get to this future vision of it, is obviously yield-bearing assets. So treasuries, real estate, insurance-linked securities, private equity that is yield-bearing, car washes, hotels, etc. I know that, even what we're doing with Mavryk and Equiteez and multibank is primarily around assets that people want. So think, again, real estate, gold, etc. I do want to see a maturity of our field. Regulation is really boring to talk about, but it's all kind of converging together. So I don't want to dive into regulation. Some of the best ones in the world are here in Dubai with VARA. But I really do want to see a moment where I'm happy to say that we have more than 5 well-rounded competitors. I mean, we were at the Block conference the other day, yesterday and today. I did another interview with a competitor. To me, I see our competitors right now as a rising tide raises all ships in our industry. So I'm very happy to collaborate, very happy to see where we can work together, even if it seems counterproductive to most companies, but we're still at the very tipping point of adoption, the very tipping point of understanding this. And so I honestly would like to see more valid competitors, because it shows that our field has matured to a place where the industry and the wider than our industry has valued the technology that we're bringing to bear.
Yeah. I mean, and Alex, we should do a follow-up as well, because, there are things that we should further discuss, like the regulations in Dubai and, just other things that are a bigger part of this puzzle, right? But I also want to know, what is next for Mavryk? Is there anything that's going to change that we should be aware of, or anything upcoming that would be interesting for our listeners to know about?
Well, I've kind of let the cat out of the bag with the gold deal here, which I haven't really talked about, publicly. I'm glad this will go out after it gets announced. So you heard it here first, in a way. Long story short, what we built on Mavryk is, with RWA tokenization, it's not just about representing an asset with a digital token. That is one step, and even in that step, there might be 7 providers that are involved. But it's what we did at Mavryk that's different than a lot of other companies and blockchains and industries is we ensured the full life cycle stream of tokenization. Because if you go and buy a house, most likely you put a down payment, you bought a home, you got a loan against it, which is effectively a mortgage's loan at the end of the day. And what we did with the Equiteez tech stack on top of Mavryk is built the ability to tokenize and sell these assets to the public, to have these transact in the secondary market, which it's a long story. I got into this on the panel the other day, but everybody thinks if you tokenize it, there'll be instant liquidity. And where does the liquidity come? The liquidity doesn't come from secondary markets. There's increased liquidity in the secondary markets. Don't get me wrong, but gold will trade differently than a single family home in Detroit. You're not going to have a single family home in Detroit trade $100 million of volume a month, but an insurance-linked security or gold might, depending on the total market cap and exposure, et cetera. But what we also did is we built a lending platform as well, so that not only can you buy this piece of private equity or gold or real estate or whatever it is, but you can also get a loan against it, which is the majority of where liquidity comes from in private equity markets. The majority of private equity is illiquid assets. People think that tokenizing them becomes this liquid thing that's traded like, Tesla stock. It's not true. There's increased liquidity, but really the liquidity comes from lending. And so what we did is, not only did we build the tokenization and offering and trading aspect with Equiteez, we also built a lending bank called Maven, where you can then deposit your RWAs and borrow against them. So I think the most exciting thing for us in 2026 is, in a couple months, the multi-bank platform will be going live. And shortly thereafter, we'll be launching the Maven platform, which is the lending bank against this. It also has oracles. You can borrow against it. You can lend stablecoins to be borrowed in these RWA-backed vaults. Everything is non-custodial, by the way. We didn't get into the technicalities of it. Everything is smart contract-based. Everything's non-custodial. Ourselves and multi-bank don't have access to your funds in any of the products that we built together. So the most exciting thing for Mavryk, I think, over the next, call it 7 months of the year, is the deployment of our Equiteez tech stack as its partnership with Multibank for MBIO's RWA platform, and the launch of Maven so that you can borrow against it, and really giving people around the world the ability to buy assets they just simply can't. You have $10, you want to put it towards a car wash, go buy it. You have $1,000, $10,000, you want to put towards a senior care facility, go buy it. Like it's one of those things where like some people in this world, especially as Westerners, we're economically speaking luckier than others. And even in the West, there's discrepancy between social classes. RWAs give this ability for us. What I would really like to see is to give the ability of the modern American, the modern Westerner, the modern African, the modern Asian, no matter where you are in the world, to be able to go and to put money towards your future instead of throwing it at leveraged GameStop positions because a hedge fund is trying to short it to oblivion and you want to get in. Like, this is the ultimate form of Wall Street bets. It's a non-violent kinetic response to overregulation and manipulation. And so for me, I'm just excited that, ourselves, amongst other incredible companies, are going to be able to give this economic revolution to the world. It's a non-kinetic, violent response to overregulation, and I would really like to see the rebirth of the middle class. That to me is the most exciting part of 2026 and beyond.
Yeah, no, it is. It's really exciting, and we should really do a follow-up because there's really so much to dissect here, and it's great. I mean, our listeners, they may be thinking now after hearing this podcast, I'm going to own part of a car wash, or I'm going to own part of a senior living facility. I mean, all these examples.
The cash cows.
It sounds.
The cash cows.
Yeah. And I didn't know that. And that's something we should also dig into. But Alex, if our listeners want to get in touch with you and learn more about Mavryk and about what you're doing, how would they do that? Are you on X? Are you on LinkedIn?
Well, as a CEO of a company, I have to be on all of them. At least our marketing team has to be. So I'm Alex Davis. I'm on X. Mavryk is on LinkedIn as Mavryk Network. Equiteez is as well. We're also on on Twitter. X. It'll always be Twitter to me.
I know. I'm the same way.
Yeah, call me a millennial boomer on that one. But we're on X, Twitter, LinkedIn. We have an Instagram now, so you could reach us there if you want to get in touch with us about tokenization. You can. Our DMs are open, and the Mavryk is a layer 1 blockchain. Mainnet went live in September, so it is available on MEXC and Gate. And the RWA platform will be going live in a few months. So stay tuned for everything that we have coming in store. It's one of those things where, everyone expects in the crypto world, you announce something and immediately day 2 it should come out, but we like to announce things and we actually have to build what we announce, right? You get a partnership and you have to deploy said partnership. So some great things are coming soon. You'll see that on our announcements. And, Rachel, it's always a pleasure to see you. It's actually probably been a year since I've seen you in person, but, hopefully we'll get to see each other in Dubai soon or LA again. Or Texas. Oh
yeah, definitely. All of my favorite places: LA, Texas, Dubai. I'll be in Miami for Consensus, which this will air after Consensus. But yes, Alex, hope to see you soon. And it was a real pleasure chatting with you and catching up. And we will do a follow-up because I'm sure our listeners want to learn more. So thank you, Alex.
Sounds great. Good to see you.
Thank you. Thanks. Bye.
All right.
Special thanks to 4Labs Digital for producing Deep Dive Podcast. I'd also like to thank the sponsors behind Deep Dive. You can click the links in the show notes to learn more about each of the initiatives from these sponsors. Finally, thanks to the listeners for tuning in. Please be sure to subscribe, like, and share.